Hello and welcome to Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we will talk about HUYA Incorporated, traded at New York Stock Exchange, ticker name HUYA. So at the moment what we see with this stock, the situation is that it is in a general decline. Of course you can see it. There is a long-term formed channel here. If you look, started from the level of about 35 plus by mid of February, and now we are declining with very interesting pattern. Actually, you see there is a broader channel than usual, but what is very interesting is that it's strongly rebounding from the bottom of it. And if you look more carefully, that recently we are finished, especially today and last two trading sessions, we are actually in a very strong support line sitting here, which might form for us, and it was really historically also very strong, which might form for us a very strong opportunity for possible rebounds here, which could be really high all the way at least to the level of moving average 20, because here you can see it almost coincides and actually parallelly follows the top of the descending channel, and also works as an attractor. It worked as an attractor usually mainly here by mid of March, where we can see that we had this move up with two legs, actually 1 and 2, and then we observed further decline. And it also, of course, nicely coincided with formation of secondary wave of MACD histogram. You can see it at the bottom here, which is also a classical indication. But then by formation of magic cross down, when moving average 20, the green line hit from the top moving average 50, the blue line, we saw further decline, and again reconfirmation of the bottom of this descending channel. But now we are already below this support level of 1865, and we are approaching to the vicinity of a next support level that will be formed here at about 1771. Although it's of course quite low, but it is a very strong one. Also there is in between another level, so actually it's very well echeloned, but there are many weak support levels, let's say, but altogether they create a very nice damping channel for this decline. So decline is kind of stopped there. It should not at least pierce further, because if you scale down, as you can see that we are already at the very strong levels. Any further could be only the situation in March, April of 2020, when all the COVID declines were globally taking place. And if we go there, of course, this will create for us another very strong buy opportunity. So with this being said, let's return to the current situation, the current scale. We can say that there are many, let's say, levels we can play with. So let's write them here where we can enter and where we can do actually nice profit. So first of all, speaking of profit, it's always advised that our channel, I know sometimes people criticize it, but we really advise it and we really stand for this. It's taking profit at 10 to 15% from money allocated in the position. It's really important, because if you do so, if you create this culture or tradition for yourself, really do it all the time, take it, enjoy it. If needed, you can re-enter. Believe me, during a year you will make up to 2, 3, even 4 times of your money, because it is adding up non-linearly. So don't keep stock too long, it can expire. Then instead of going up, you will actually have to take losses. And this is one part. And secondly, it's about averaging down and entering in nice levels. So let's talk about these. So the first level to enter would be, of course, if you look today, let's magnify a little bit. We finished with a very nice, actually, candle, which is, if you magnify, it's a small white red doji, meaning that we actually sitting exactly in this first channel. You can see between 1865 and 1808. So even without looking at today's candle, you could already predict, okay, this should be actually the volatility zone, and indeed it is for today. So this means now scaling back, it means that this could be a very nice opportunity to enter, and it already could work as a rebalance, because this worked also as a rebalance by end of the year. You see in December, end of December action, we have exactly this situation. Let's draw it with the arrow forming here. So this might repeat, and if this is going to repeat, we might have similar situation here by opening next week. So this will make for us a first buying opportunity. So let's write it here. So this would be between 1808 and 1865 will be the first channel to enter, to buy, and try actually to make the profit here. So let's make it as a call out, and this would be our first channel to buy. Then of course we need to take into account that some further decline might take place, because you see the channel, the descending channel, this gray dark zone is very sharp, so we could go even lower, and we could go all the way to the second level here, which will be between 1647 and 1565. So if this is going to happen, still technically possible, because again, if we would look in a smaller magnification, you can see here that this is the zone where we were by a March-June action of very dark COVID days previous year, and this worked also very strong channel, trading channel for this position. So if we even still decline further, it will be extremely strong rebound. So if we go there, still possible with technical decline, we will be between the zones 1565, 1647 to enter. So let's write it here, 1565 and 1647. So this will be second entry position, still based on let's say technical correction and technical descending in the downwards channel. But in general, what also might happen, although not given due to technical analysis, it's a negative catalyst might kick in, and if this is happening, we need to average down and buy in a very principal support levels. And speaking of those, of course, it's hard to say about any real support, because we don't have any technically real support, but we have these overall lows that were observed during COVID days, and this therefore will be at these levels. So it will be 1457, and this would mean that anything lower than 1457, and this is the start of volatility at actually 1396, or even just 14, would be a last enter opportunity based on negative catalyst. So it's not that we predict the price go there, it's not that we say it goes there, but it's just a risk mitigation which we need to take into account if we want to trade here safely. So just to keep it in mind. And with this being said, let's magnify it a little bit. So this will be our third level to enter and to buy here. So it's a free portions play. What does it, not free portions, a free levels play, meaning that we will buy slowly. It's not that we even predict going second level, because this is just risk mitigation and part of our mixed analysis that we do in our channel, meaning that we would like to incorporate three standard ways of trading. So one is a technical analysis, second one is non-linear average down based on support resist channels, and the third one is risk mitigation based on possible negative catalyst kicking in, and this is usually we reserve for the third level, for the third buying opportunity. So with this being said, that's the way to trade here, to buy. And if you would ask yourself, how should we enter, how non-linearly we should enter? Well, this we do with a simple 5 portions play, because this is still very classical behavior. What does it mean, 5 portions play? It means that the money you would like to play here, you can split in 5 portions, and then you can buy with 1 portion in the very first channel here on the top. Then if price declines, still based on technical correction, you can buy with remaining 2 portions, and if we go let's say lower with some negative catalyst, we really go to the third level, then you can again average down with 2 portions. So while others will be taking losses, you just buy in and wait for your profit, wait for rebounds. And again, the rebounds and the profit target is 10 to 15%, then if you want to re-enter or check other opportunities. This is really the best optimization for profit versus losses. Of other parameters that says that we might even rebound already from the first channel is actually, again, MACD. Remember, we discussed by the beginning of the video this situation when MACD histogram was forming, let's say, let's magnify it a little bit, was forming here the secondary wave. Now it's similar situation. We are about to either form the third wave or pierce upwards. So it also means that we might have here again a similar situation, and actually the bounce is expected somewhere in this vicinity in days, so a couple of days, and therefore we might already rebound from the very first channel too. So it's very bullish momentarily, but still we need to keep in mind possibility for further decline. So with this strategy to trade should be very safe and very nice for HUYA Incorporated. So good luck with it. Please don't forget to subscribe to our channel if you're first time watching this video. Press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.